Good afternoon, everybody. This is Dennis Rowan with the Active Trend Traders. Of course, it's morning still here on the West Coast. Um, Want to welcome everybody to the How to Make Money Trading Stocks webinar. Michael Bishop is joining us. How are you today, Michael?
I'm fine. Great weather here. Everything is fine.
Okay, believe it or not, it's raining here in California. You know, that song that said it never rains in California, well, they lied. So anyway, this morning's market's looking kind of interesting. Not necessarily anything to get excited about, but it is trying to make a little bit of stab. Probably a lot of short covering going on because there was a lot of people wanting to get short this market. They've done that. We're down to support. We're getting a little bit of a relief bounce back up. And we'll be looking for some good setups going into next week. And so I want to remind everybody that all the materials we present here are for trading purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Michael's disclaimer from Europe. Michael's going to be talking to us a little bit about the European, how the European is kind of markets are reacting to what's going on in the U.S. markets today. Want to remind everybody that I am a very big proponent of training. I think that little, bites of training are very important. And so we try to provide a nugget of training every Wednesday night for the premium members of the Active Trend Trading Service. This coming Wednesday night, on May 11th, we are going to be talking about setting the foundation for Strategy 3. Now, Strategy 3 is where we own some leaps out in January 2017. We own the Spider leaps, both of some calls and puts, and then we also own the Tesla January 17th calls and puts, and we sell premium against those every week. With the idea being is during the life of that long leap and or long call, we will basically pay for the initial investment plus gain an additional 50 to 100%. So far, both trades are going very well, going through where we're at in 2016. Take a look at the markets for May 6th, short covering. It appears that we are getting some short covering, probably a rally into the close today. Started when we bounced off the 50-day for the S&P. And so the S&P was resting on the 50-day moving average, and there is horizontal support where it came to rest. And so looking for short covering. May go on into next week, push up. Looking, the NASDAQ of the three tracking indexes that we utilize is basically the weakest looking of the three. And then Russell at support. Is it ready for a pull-up? Volatility is trying to make a return to the market. It hasn't pushed through as much as we're expecting. But if things, do, pull up and then drop back down, the volatility will increase going into the last part of May into June. So far, we continue with this violent earnings season so far. Those of you who watched the, Tesla, Tesla had okay earnings, but disappointed a little bit, and so it was up, and then it was down, and then it was really down. And so Tesla remains a very volatile stock. So we saw the same thing in Facebook, Amazon. Some of those you got a real good pop, but it didn't go very far after that. And so that's where we're at with that. Here's the, as you can see, the percentage of stocks above their 20-day moving averages. Here's where we were last week at this time. It had basically went up, retested up on the 80 level, and then fell back down to where it was at 54%. Where are we at today? Well, it has continued to fall most of this week and has almost dropped into this lower reversal zone that Mike Traeger and I keep an eye on for potential triggers for the early warning alerts. And so this has been a fairly rapid fall below the 20-day moving average for the large number of stocks that are on the NYSE, which makes up the majority of this particular index. So we'll be watching for what happens when it gets down in here. Are we going to get a bounce back up and then a fall? We will see. Mike and I do not necessarily take a lot of credence into when it's overbought and up in these areas, because over the back testing that we did of the S&P and the Russell, when this would get elevated, that did not necessarily mean the price of the stocks or the price of the indexes were falling. And so we'll keep an eye on this one. Not a lot of, again, nice drop down so far today. May get a little rebound into the end of the day, but we're sitting down at 36.4% of the of this index's stocks below the 20-day moving average. As we looked at this on Wednesday night, this is the percentage of stocks above their 200-day moving average, but it's a monthly view. Now, of course, since we're not close to the end of May, this is reflective of the position it's at as of when we copy the chart. But as we see, we came up, pushed up the percentage of stocks above the 200-day moving average, pushed back up above the 55 level, but then has dropped back down to 50. Again, kind of a quick move. What's the reason for that? And what can we take away from this? Well, a couple of things. One is that it would move so quickly back down to a 50 level is telling us that, one, the number of stocks that were above their 200-day moving average, they didn't get much above their 200-day. This particular composite on barchart.com, Joe, is the NYSE and a couple of other things that they put into it. There's another website that does have just a pure NYSE, but they match each other fairly well. And so last week we were sitting at 54. Today we are at 50.3. The one thing that I am keeping an eye on is we've talked about this several times. This is the spiders, and we do have a little wedge thing going on here. We got back up into a resistance area and fell. And as Mike Traeger has highlighted a couple of times, that because these are monthly closing figures, it does not reflect what actually happened here in the January-February timeframe, where the price of the spiders had actually fallen down into this area, but by the end of the month had worked their way back up. Some people give a lot of additional credence to closing data rather than the intraday and think that the closing data, either monthly, weekly, daily, and even intraday charts, is much more reflective, and that's what a person should use to plan off of. And so what we're seeing here is right now, what's the expectations? Price actions on the S&P or the spiders could in fact just continue to chew sideways until they work it out, and then it may bounce up. But from the economy standpoint, with the jobs numbers today coming in and disappointing, the market selling off a little bit because of those, is there underlying strength in the market that's going to actually break it out, or is the stocks on the various indexes overvalued to the point where in reality, they're, in order to get back to their past evaluations, are going to have to drop. We know that there are forces at work within the Fed to try to keep the market up and stable going through the end of 2016, because it is an election cycle, and we'll see what takes place. So here's where we sat as of about 11 o'clock this morning. The Dow is still up for the year. The S&P is slightly up for the year, but it's giving back about a half a percentage going as of about 11 o'clock. The NASDAQ has fallen much more quicker, and what's interesting is the Russell seems to be running quickly to try to catch up with the NASDAQ. This is from the highs of 2015, and for some of these are all-time highs. Every index is down from where it was, and as you can see, it has continued to fall from where it was last week. Now, Michael, before we get into the charts themselves of the S&P, I'll bring up the charts here. But what is, you'd sent me some information that was comparing, reactions in Europe to what's going on in the S&P, the dollar, and that kind of stuff. What is going on in Europe?
Well, first, I want just to comment on the performance you're showing. Yeah? You say the S&P is slightly up year to date, and in US dollar terms, you are right, of course. But if you take euro, or you could almost take all, Australian dollar, Canadian dollar, Swiss francs, definitely, then it's a -7%, -8% even. So I mean, if your living expenses are not in US dollar, then it's really, or in the current, in the last 6 months, it has been really challenging to we have always keep in mind the fluctuating dollar rate. I mean, and now the dollar was quite strong, and since 6 months the trends reverted, and that makes it and that makes the picture look totally different if you look at the indices in dollar or euro.
So does the
and another interesting thing I noticed basically every day in the last couple of weeks is if the dollar, I mean, we did not have a lot of movement neither in the dollar nor in the S&P, but the days when the dollar went down, the SPX went up a little bit, and
right,
vice versa. So if you take a basket of currencies, we see a downtrend for the whole year, and we are still in the negative zone.
Okay. So so in other words, if you're investing, let me get this clear. If you're investing in the S&P in euros, okay, because of the exchange rate between the euro and the US dollar, that's resulted in a person actually being down about 7% on the S&P.
That's the point.
Wow. And so, and I wonder how that works in the flip-flop if you were investing in dollars in one of the European exchanges. Would you be up more because the dollar was stronger?
Yeah, I think if you just take the chart, then you think, oh, Europe is really weak. But if you consider then that, for instance, the German index, the DAX, which is the biggest one of Europe,
right,
is noted in euro, then I think the performance is very, very comparable.
Okay, cool. That's that's one of the things that always makes it because so around the world people come back to the U.S. indexes to kind of gauge things off of. but that if you are trading in, in the global economy or in another country, that that exchange rate does have a big impact, because as you can see, the S&P is slightly up. But
Yes.
as you're saying, because of other factors that weigh in on trading, in fact, a person could be down, and if they were counting on this, as you said, in more or less fixed income type of investing, it's a pain in the butt when you're doing that with your retirement. So Joe says,
Yeah, and I mean, if you, as a dollar investor or as an American, basically, maybe with exception of China or so, not even China, you can basically trade everything in dollar or an ETF dollar product.
oh, okay.
But
Interesting.
as a Swiss or German or European, it's challenging.
So,
Hedging currency costs, yeah.
yeah. So Joe makes a point. He says that I think this is why you should in dollars hedge the ETFs. And WisdomTree markets these. Oh, WisdomTree is a one of the oh gosh, they're like BlackRock and all kinds of stuff. They have they market ETFs. So interesting stuff. So let's take a look at some charts, as long as we're here. So okay, S&P. As many of you know, or many of the premium members know, we got this little pull up right here last week, and then we dropped again. And I was looking for and wanting a pull back up to this trend line in order to get short. I'm still looking for that potential. We've got a couple of things going that are now out of sync with each other. You've got the TSI on the daily, actually looking like it's getting to a place where it would like to turn back around, but this may just be a squeeze or a slight turn back to the zero line, because once these fall below the zero lines, both momentum and the TSI, typically means you're now in a downtrend. Now, sometimes it can go like a sine wave, but oftentimes when it showed this type of negative divergence and then drop below it, that is an indication that the downtrend may be more significant than just a simple pullback. And so we'll be keeping our eye on this. We're getting a bounce here. Draw a picture in here. Actually, I'll do this with the, there we go. So it'll show up across. We came back down into a multiple level of support, and the S&P is in fact bouncing off that this morning. Again, it may be partly due to short covering, because the put call ratio had gotten to extreme levels where the market usually does a little bit of a bounce. Now, with this said, on the the shorter term weekly daily information, when you look over here at the weeklies, we still have some mixed information. The TSI is turned over. Now, as I've said many times, I like trading the TSI because it puts in patterns. So we've got the initial breakdown, but what I find interesting, in a week that is appearing as if it's going to be down, the weekly momentum is actually up, and that in turn is positive. So we've got a negative and a positive indication going here. And so the anticipation that we would pull back up into this trend line or the midsection of these candles would not be surprising. And as long as this sharp trend line here, which is actually this trend line over here, as long as that stays in place, then we can anticipate going up there stalling. It may stall out here at the 2075 level, and about on the 12th, which is Thursday of next week. And so that's what we're looking at, because the market's doing excuse me, a couple of these things where it's now that it has reversed a little bit, we've got a bearish cross on the 20 and the 8. We're getting these 1, 2, 3 days up, 1, 2 days up, then actually no days up here. Today may be the first day up. So we may go, 2 or 3 days down to stable, 1, 2 to 3 days up, and then drop again. It's getting into that kind of a pattern on the S&P. Interesting. NASDAQ. There we go. There's the NASDAQ. NASDAQ also coming up, and we can draw a couple of lines in here as a one. Here is a strong level of past support resistance. It dropped it this morning and now has rebounded back up through it. It has fallen further away from its moving averages, and so a reversion to the mean would not be a surprise. We've got a confluence of multiple moving averages up here about the 4,400 level that should act as very strong resistance as prices push back up into this area. The line that I drew over here was basically a symmetry trajectory from the fall from here to here. I traced this out and then just moved it over to about last week's high. And this type of prediction, if the symmetry is maintained, price action stays within this this downward sloping channel, we would expect some kind of a fall along this line. And if symmetry was maintained, we could see the bottom of the channel around the, well, let's see here. That corresponds to the week of the 27th of June. That again also goes with what some of the things that we've been tracking with regards to this current top being at least similar to basically a combination between 2000 and 2007/8. And we'll see what transpires from there. Prices could reverse here and pop, break right back through and move higher. If that did in fact happen, we would have a higher low. And once we take out this low, that would put us back into a more intermediate type uptrend. And so we'll be looking for that to potentially happen also. But based on, similar thing, conflicting signals down, momentum up. Daily is showing that it looks like it wants to at least start a little bit of a rebound. And we'll see, but now that since it is below the 8 and the 20, and we have this confluence of 3 multi-moving averages right there, we'll see if it can get any higher than that. We shall see. And if we were to throw I'm just going to throw a fib up here quickly. One is I'll fib it from this high or this low to this high. As you can see, we got right down just below the 38.2, and it's bounced back up. Now let's do another fib where we go from here, from this high here, down to what appears to be a swing low. Now we may have a swing low in place today, and I'm going to erase that longer term one. And look what we have going on is right back up into that 4,400 level is where the 38.2% retracement is between the 32 and the 38 of this move from here to here. That again will be a zone that I will target going into next week for a potential move, for a reversal move and then a move back down into the downside. And by early next week, the 20-day will be at that level. So that's what I'm looking for going into next week. So Mike, you got any comments going on, Michael?
Yeah, not really.
Okay.
So it's a little bit boring. I mean, yeah.
Gee, thanks, Mike.
Yeah, I mean, on the one side, there are quite a lot of interesting phenomenon going on,
Yeah, yeah.
but action-wise, it's not going on a lot.
Yeah. If I was going to, and at this particular point, but if I was going, I'm not going to do this because I think that because the NASDAQ has greater influence than the Russell, I'm not going to get long the Russell, although, this bounce off of this moving average line here could lead to a pretty good, a trade at least back up to the downtrend line or maybe a little higher. So we'll see, because it's got the same type of thing going on. The truth strength indicator looks like it wants to turn around on a daily basis. However, on the weekly basis, it's being overshadowed because it looks like it wants to cross over. However, conflicting momentum indicator on a weekly basis being higher. And typically when that happens, the market isn't ready to totally let go to the downside. And when you see that when it looks like the market's going to turn around and the momentum spikes down, you see the same thing there. It's a little bit of a, and so Joe asked, would I buy the inverse index ETF on the Russell right here? No, I like it better, Joe, if I can get back up into this area here, where because it is in a position where the the short covers, the people who are covering their shorts, are in fact starting to come in and rally this back up. And so I want to see this stall, and if we touch that, that's where I would be looking for that inverse index ETF on the Russell, which is TZA. Great question, though. Let's see, Gary asked a question. VIX is going down today. Is it the time to buy the VIX for July? It's getting very close, Gary, especially if things hold up. I may have been a little bit premature when I went into the June VIX, but I know that, I know at some point that volatility is going to spring back into the market big time. So,
yeah, but the problem with the VIX is you have strong contango basically all the time. So I wouldn't. So there are a lot of study. I mean, there is no. You cannot long volatility over a longer period.
yeah,
And the longer period means 4 weeks or 6 weeks. I mean, of course you can be lucky and you have really a big bunch, but over the long run the contango kills you. I mean, what you could do is write an option against it.
yes,
so you have at least a premium, so that you're positive if volatility stays low or even goes lower a little bit.
Yeah, exactly right, Michael, is that, what Michael's talking about, if you buy a call in this period here, even if it's out in July, you can sell weekly premium against it, and that will help with the thing that's called contango. And so then if the VIX goes into backwardation, why not just buy the inverse ETFs then? The inverse index ETF, I'm thinking you're talking about the inverse index ETF, Joe. They are plagued. Any of the inverse type of products are also contango and or backwardation is an issue and a problem. And that's why I like to not hold on to any of them that suffer from either backwardation or contango for more than 8 weeks. What you're looking for is these big moves. And I may go in and say, okay, I'm going to get the $18 or the $19 or even at this time the $17, and I'm going to be willing to pay for like $1 for it or something like that that's out in June or July. And that way, if we do get a big bust up, I know that if it goes all of a sudden to 18 or 19 or 20 or 22 and 20 or on up here to 26, which can happen very rapidly also, then it will more than pay for the option. And it just depends on how a person wants to trade it. But like I said, VIX, it's looking very promising. We've got looks like it wants to turn around on a daily weekly chart. It's checking up. It's up into the zero line here. We'll see what this does and see if it holds this area here. And for those of you who may or may not know what contango or backwardation is, on the a lot of the leveraged ETFs, because of the and it's really prominent in the inverse leveraged index ETFs, or inverse leveraged ETFs, is that the vehicles that the managers have to buy to maintain that leverage position, they have to be rolled over about once a month or so. And what happens is sometimes when they roll them over, they have to roll them over for and it costs them more than it did the first time. And so there's a tendency for the value of the leveraged inverse index ETF or leveraged ETF inverse to lose underlying value. That's why if you go and look at a chart of like TZA or any of the inverse leveraged index ETFs, you'll see reverse splits on them. And sometimes they're pretty dramatic, like 1 to 20 and that kind of stuff, when they rebalance and bring the value of that ETF back into balance with the non-inverse ETF. So, and then you can be really frustrating because you'll wind up going, well, dadgummit, I bought this, and at this certain level, the indexes were at this certain level, but now it's worth less than what I bought it for. But the index that I bought it against is at the same level, and so it'll have you talking to yourself. And so Michael is absolutely right. You want to limit your time exposure to this to make sure that you don't get wrapped around the axle with backwardation and or contango. Did I kill that one enough, Michael?
Absolutely. Just one different argument. I mean, volatility will go up, and you could be almost 100% that every year we have some volatility spikes.
Right.
Markets are efficient. I mean, it would be idiot-proven trade to long volatility whenever it is very low.
Yeah. And so, and that's one of the other reasons why Mike Traeger, when he trades the index ETFs, he only trades, well, what he'll use for his triggers is the actual underlying index or non-leveraged index ETF, because for a more solid entry trigger. So. Okay, where are we? So again, so what I'm looking at for next week is basically a pullback up into resistance, and then that would be some potential triggers to trade to the downside. And I hope it just gradually drifts back up and then hits its resistance level and then falls hard. How are we doing right now? Okay. Okay. And I will basically, we've covered this before. Yes, we are still under the dome. The dome is expanding a little bit. This is that quarterly chart that Mike brought to the table a few weeks ago. And so it's really kind of interesting. We have so many competing things going on out there in the market. One, the Fed wanting to make sure that the market doesn't fall, but like I said, the valuations of the market being so at all-time historic highs, putting downward pressure, saying we've got to fall to get our back into the valuations back into the appropriate historic levels. So the path of least resistance. Michael, thank you for this cartoon. I love this cartoon where here's the bear posing and the painter's painting a bull. This guy here is a Fed governor, works for the Fed. I think he's out of Chicago or somewhere. I was just joking. Anyway, I've added an arrow this week. So we're going to basically have a red, yellow, green arrows. I think in the interim, we may have a nice little, pushback up into resistance. I think that we're at some support levels where they, may hold and we push back up. Because of the interference from the Fed and all that kind of stuff, we may go into just a sideways market that may last for several weeks. Now, within that sideways market, much like happened at the end of October, November, December, January, February, January of last year, we saw the index fall into just a downward sloping little narrow trading range that was about 4.5% wide. On the leverage index ETF, that equates to about 12%. And so we may see that, and then in June or July, or even maybe at the end of May, the red takes over as the path of least resistance, and because as we see some of those longer term moving averages like the 50s and all that kind of stuff on the S&P, it is starting to get hit from the top and hammered over. So we'll see what transpires with that. Okay, here's where we sit as of this week. We had on the strategy 3, we had 2 really great trades. We had one trade on that we're doing on a pre-earnings run potential trade. We let that stop out the day prior to earnings and for a small loss. But one thing that I'm really pleased with, as you see, there are cumulatives going month by, not cumulatives, but this was the actual monthlies. This is a cumulative down here. But month after month, my toughest 3 months of trading is January through March. We've gotten past that with positive results, but we've been increasing every month the amount that we have been taking in. And so I'll look for that to expand. I'm very excited about what's going to go on in May, regardless of the direction that the market goes. And so okay, at what I'm looking for and pushing toward, this is the equity curve on closed trades, is by the end of May to have pushed this back up into about the 16,000 level is the target for the end of May. That gets it back on track for the active trend trading to generate a 40% return for the year. We're sitting at about a little bit over 10% now. This is the trade that we're going to be talking about on Wednesday night. And this is a strategy 3 trade, which I want to highlight to everybody, is this was Tesla. We bought Tesla on the 29th of September 2015, bought one leap call in 2017, and one leap put in 2017. It expires January 2017. And as you can see here, what we've done is we've been able to, one, it cost us $9,000 to open the trade. We have since collected $9,600 on it, making our cost basis a negative $658. If we were to close the total position right now, it would generate about $13,000 544, or about a 50% gain over, since September of last year. What I like about it is I've got 37 weeks left where I can generate, if I draw in $306 per week, equates to about $12.85 per month. I need to get that up just a little bit to hit my requirement, but I will meet my objective of both paying for my underlying and a return of about 100%. And so, again, I like the strategy. If you want to learn more about this strategy, you can go down here to our website, activetrendtrading.com, training-webinar recordings. Today we have a look at strategy number 3, and that's for trend trading members. Get rid of that. Kieran asked a question. Didn't get his fill on Tesla today. Yeah, Kieran, did you go in the middle of the range where we had the, where we're having at the lower side of the range after the alert went out? Because I know I had to go to the low side of the range. I got filled at about, I think it was 520. Okay. And sometimes they hit and sometimes they don't. And one of the things I like to do on situations like that, Kieran, is I just leave the trade on. One of the things with the Tesla trade is there will be additional opportunities next week to jump into the trade, or even maybe at the close of the day. Just go to that intraday chart to see when things are oversold, and if they're at a level of support, that's where you jump in. So tomorrow is our BAM meeting in San Jose. We'll be talking about using indicators correctly. We do trading every Wednesday night at 6:30 for active trend trading members. And if you have a group that anywhere in the United States or anywhere in the world and would like a presentation on what we do, just drop me an email. I'll be glad to do it via webinar. My wife and I are going to be driving cross country in August of this year, and we're going to be going up through Boise, down through Denver, down to somewhere in Missouri, about Springfield, Missouri, down to visit my mom in Arkansas, then back across Texas and all that kind of stuff. And so if you're kind of like on that path, drop me a note. I'd be glad to stop by and chat with your group, or even just and to see you. If we could have a cup of coffee or something, that would be great. I would like that. So active trend trading is a system that follows the 5 pillars of active trend trading. 1, we cover what to trade. We look at only top quality IBD growth stocks, index ETFs, and we explain when to enter, what our action point is, what our exit point is, what strategy we're going to use, and what to expect. I'm a firm believer that oftentimes I see so many traders that get involved with a strategy with no solid system in place. The active trend trade is a proven system that is in place, and we work each one of our 3 strategy areas off of the active trend trading system. Here's one of the trades we did earlier in the year, a pre-earnings trade on XRS. We got in here on 4.7. It ran up. We took off part of the position at about a 5% gain, and took off the rest of the position at about a 14% gain up here at T2. Total gain on the stock on the move was about 9.98%. But I'm looking for these all the time. One of the things you should have received an alert this morning on LGIH, and it's doing a setup that's very similar to what XRS did. Haven't gotten filled yet, but we're going to keep working that one. So for the month of May, we'll be offering a trial membership to anybody who would like to see the rest of the story, sit on some of the training sessions for $4.99. It gives you total access to text alerts, training videos, midweek training webinars, email alerts, And you can find out about that at this website or on the Market Tech Talk YouTube channel. Just go to the banner and it's in the right-hand corner. Oh, and of this, a full month of active trend trading, even at the, the regular price or the discounted price, is a value of about $300. You get at least four training webinars, the alerts, and plus 3 to 4, one newsletter over the weekend about what we're going to be trading the following week, and then updates, about 2 to 3 updates per week. So that's all I have for today, folks. Oops. I think that was what we usually do for people who sit in on these webinars. So see you next week. Have a great weekend. Trade wisely, trade profitably. If you're in the Bay Area, come out to the BAM at the Masonic Temple in San Jose tomorrow. And so with that, Michael, I'm going to call it a day and look at a couple of charts if folks want to take a look at some charts. Michael, you got any final comments, my friend?
Not really. I mean, maybe we can take a look to some chart. I think there was some excitement, and yen was a little bit excitement, and Nikkei and the Bank of Japan. But as I said before, there was not that much going on.
There certainly wasn't. Yeah, the markets have actually have run up and then kind of stabilized. So, okay, Gary, IBB. I like that. Again, folks, this recording will be posted, either later today or first thing tomorrow morning. And please, let other people know that this is a free webinar. Join us if you know anybody who's interested in the market. Just have them join us. So let's take a look at IBB. Okay, yeah. The IBB, for those who don't know, this is the I think this is the biotech ETF index fund. And as you can see, Gary, you're absolutely right. We are pulling back into a level of support. You've got this whole, support zone that's down here. And it just entered that. It had broken out to a new high and is now rebounded. This is kind of and I don't know what the options are on this particular ETF are, but it puts in really nice technical patterns, and that's one of the things that I do like about ETFs. If you can find an ETF that does put in good patterns, you can tend to do pretty well with it. But as you see, it's pulling back into its level of support. And what's it going to do from here? Is it going to bounce or move down? The daily candles are telling me that buyers are trying to stop the fall. And I say that because the lower wicks of these daily candles are longer. So that's telling us that, yeah, strong buying came in to push prices back up. We'll see what we get here on a weekly chart. It still looks like it wants to do a little bit more downside. But if I get, Gary, this is a good example. If I get down into a little bit lower than that, down into that level, and my TSI and my momentum are at a higher level, we've got a really strong positive divergence on those on a weekly basis, which oftentimes leads to a really excellent move back up to the upside. So good choice. Michael, you wanted me to take a look at now. I don't know if it'll come up on my chart. So what do you want?
I just had a discussion yesterday on GLID that should, I think it looks like very, a GILD.
Oh,
That's
okay.
GLID. It looks really like the IBB, but maybe it's a little bit way ahead
Yes,
in terms
Gilead.
of consolidation.
So, yeah, Gilead. I mean, it got hammered, but it's right back down here to support level. I would want to take, anytime I see something like this, I would want to go ahead and move it out to also the longer term chart, because just on a weekly and a daily chart, it's looking kind of ugly. I mean, we've got a kind of a complex head and shoulders pattern going on. It sold off really hard here. So I'd be looking at a couple of things here on this, Michael, is we know we have support at 8250, but if that support at 8250 fails, that's telling us longer term, and you could almost go with a monthly that we've got a cross here on the 820 that Gilead anyway is looking like a prime candidate to the downside. That's what I'm seeing. They didn't like earnings. They didn't like earnings, but yeah, good combination. And I don't know what's another biotech stock that. Oh gosh, there was one on the IBD.
Valiant is the one in the headlines.
Which one? VRX?
No. Yeah, exactly. Yeah.
You thought I didn't know, huh? Yeah, look at that. I mean, that's just getting absolutely whacked. And
I mean, they had compliance issues and things like that.
Yeah. And so, very good. So, okay. But you said you wanted to look. I don't know if I have can pull up anything regarding the Japanese market or anything. I don't know.
Well, EWJ is DTF.
Okay. I will come back to that. So what do we got looking with Amazon? Amazon looks kind of interesting from the aspect of this. Let me get back to a shorter time frame chart. But it's kind of interesting to take a look at this. You've got this kind of like this huge, multi-month cup going on, but it's almost like a V bottom. V bottoms oftentimes don't end well. And there are a lot of stocks out there with, V bottoms showing up. But as we see right now, we're pushing right back up into a level of resistance that is held before. Are we going to pull back into a handle, or are we going to push through? At this particular time, right now, we do not have any negative signs showing up on the weekly chart. But we are hitting up against resistance. So what's going to take place at that point? We don't know. Let's see, Facebook. Facebook, again, one of those. It broke up after earnings. It has maintained both its breakout of this swing high, and it's kind of used that as a support level across here that you can kind of plan your trades around. And as long as it holds that level, you're probably in pretty good shape. It is starting to push back up. Volume has been kind of mild in that it's been below average. And so we've got a nice range here going up from this, 116.75 level up to the 120 level. And if it pushes and breaks higher from that, then the sky's the limit on Facebook, because this is a new high. Okay, let's see here. I'm going to get up EWJ. Okay, now this is a Japanese. Now this is the straight Japanese market, not the yen, right, Michael?
That's the Japanese market, but in dollar.
Okay. Okay.
Yeah, that doesn't look that scary. But if you take the future, the Nikkei future, then it's quite a massive downturn.
Yeah, I mean that's that's a pretty good fall from here to here, about 30% down to here.
I mean,
And
the yen fluctuated that strongly that this chart.
yeah. So do you, well, just real quick question, do you think the Japanese market is going to react positively when the government basically came out and said, hey, we're not going to keep throwing, throwing money at the problem? And so they kind of they had some tightening.
Well, just know the result. The result was that the yen, even if it I mean they want a weaker yen,
Right.
but the yen did that's FXY is the yen. I mean the yen really jumped up. And the yen is anyway pretty over.
Yeah. And what's very interesting is when the yen strengthens, the U.S. market typically tanks. And we haven't seen that tanking, it's basically almost been running up in parallel. And interesting. It is kind of, it's kind of.
You can also, if you FXF, that's the Swiss franc, and it looks a little bit goes in the same way.
So
if in the last month.
Yeah, if the dollar weakens, the Swiss franc should go up, though, right?
Yeah, I mean you could interpret it that whenever money is flowing into the safe haven currencies,
right,
and there is a reason for this, and the reason is that people fear, Americans fear the stocks.
Okay. And so I hope I haven't. Does anybody haven't been having issues with Thinkorswim? Dropping offline, coming online, that kind of stuff? Well, poo. It's not. There we go. Come on. You can make it. There we go. It should pop up here shortly. Yeah, because I don't know if it's my, I don't know. I don't think it's Thinkorswim as much as I think it may be my computer. It did some updating today, and it's not liking its updates. Well, okay. Let's see, Dorothy, Noah, would today's action be a positive to buy as it is above the 8-day EMA crossing? Upside resistance looks far away if I'm looking at the chart. How far does the upside resistance? There we go. We'll answer that question shortly. Okay, upside resistance is up here. Yeah, Dorothy, I mean, you've got earnings coming up on the 16th. This looks like it could be just a really good, potential earnings trade. fairly tight here from, you know, if you waited for it to pull back down, or even, you know, if you bought it here, how much of a fall would that be to break this swing low here? Well, that would be approximately a, well, you're looking at about a 6% risk there if you bought where it's currently at. Now, if you would have bought, or maybe you did buy where it was closer to the, you know, 8-day moving average, then you're looking at about a 4% potential loss. Upside target, of course, is anywhere from where it's currently at up to about 32-ish. So that's a darn good move. I mean, that's about a 22% move. So I like that. You may see that again this weekend. Okay, I think we've covered everything. Let me just cover real quick what I'm looking for in LGIH. As I said, LGIH is, you know, finding support here at the 20 or just below the 20, put in this little hammer doji here. Looks like it wants to turn up. If it just runs back up to its past highs, that would be about a 5% gain. It does have earnings before the market on the 10th, which is Tuesday of next week. What are we doing with SPY? Okay, SPY. Again, SPY, when it was down here, we put out an alert earlier this morning to go ahead and sell the, I think it was the 204.50 puts for next week, and those are profitable as we speak. I'll be watching it if it gets into this area here, and if it fails to hold above the 50 going into next week, LGIH was a day order, Pierre. If it doesn't get filled, we'll recalculate for the weekend, over the weekend. And so we'll see what transpires here. And I'm going to be a little bit quicker to take some profits off the table. Tesla, something similar. Tesla came down. I was looking at first thing this morning when I saw it was getting close to the 50% retracement this morning, and it was hitting this moving average envelope. Looked like it was going to be putting in at least, you know, something close to a bullish harami for today. I said, okay, let's go ahead and jump in this, and I think we sold the 212.50. Get into the 212.50 put for next week, and we got in for that into that at $5.20. Jorge, you have the last question. Has buy able at I'm not sure what the question is. Hasbro? Okay. Yeah, it's basically holding its gap up after earnings. It is up to a new high. And so if it holds that, that would be a potential to move back up. And if it moves back up from the 20 up to here, you're talking about a 4% gain or maybe a 5% gain. If this is, let me take one last look at Hasbro on a longer term chart. And it appears as if this is, all-time highs for Hasbro. And so when they are breaking in all-time highs, you know there's no overhead resistance that should be bothering you. I, of course, would like to see it get back and pull back down to either the 8 or the 20-day moving average. But if this level of support here holds without closing that gap, or even if it closes that gap, this whole area from where it gapped up to the top of to the bottom of the gap is a level of as a support area and support zone. So, guys, I'm going to call it a day. Michael, enjoy your weekend.
Well, thank you, Dennis.
I will too. I'm going to be presenting tomorrow at the Bay Area Moneymakers, and seeing if we can, I think we're set to go into the weekend with some good positions. And we'll chat with everybody next week. God bless. Have a great weekend. See you, Mike.
Bye.